Hey, hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we try to understand what happened in the market using the technical charts and then learn something from it and plan for a better trade for the upcoming week. And this is analysis for the upcoming week that's starting from tomorrow, July 10, 2023. If you're not subscribed, please subscribe right away and then share to friends and colleagues. Thank you. Let's dive into the charts and see what do we have here. The weekly candles is what you see, left Nifty and right side Banknifty. Right, the selling pressure is very much evident from the wick size of the candle. A hammer is formed, a hammer on the top of an uptrend. Right, a hammer on top of uptrend and a gravestone doji, indecisive doji, bearish in nature on the top, and we have a gap support there, sitting on a gap. That's what weekly charts are showing. So, big bullish move that happened, previous week, continued, made new all-time highs, and then a pullback. Profit booking, absolutely profit booking is what we are seeing here. Now in the daily charts, you're seeing that the reversal, the pullback can be seen. It's a little more severe on the Banknifty, with starting with the doji on Tuesday and then continuing the fall for the last 3 or 4 days. In between, we had a bounce support that happened. So that's what it is, and it's clearly seen that it's in a previous resistance zone from Brokerage also. There is a possibility of a CIP bounce from here, changing polarity of the previous resistance axis support. Same with Banknifty also. It has moved up, come down, sitting on a gap, and moving average 20 also comes around here, and then there is a bounce that is possible. If that doesn't happen, the retracement can further go down. But this is a decent pullback. Profit booking is what you're seeing in daily charts. This is another view. This is the flat pattern. This is a rounding cup handle pattern. All this and broke out, and look what happened, and pullback. Profit booking absolutely clear from this. Bollinger Bands are showing that there is still the expansion mode on the upside on both indices, and the rally continues is what the daily Bollinger Bands are indicating as well. Look at the support resistance levels. All-time high would be the first resistance, say 19,523, 500 zones. That's a rounding number also. Then 19,600 rounding numbers, or you can also put in Fibonacci extension and find the levels. But yeah, the first resistance upside would be 19,500. Then all rounding numbers, and then Fibonacci extension 30, 50. 60, like that will calculate. So, but yeah, downside the supports are there. The first good support would be the gap that's coming in 19,200, right? That's what you're seeing. And so you have the 20 moving average support that's coming at 18,995. So 19,000 is going to be very crucial. This gap also seen there at 19,01125, right? So moving average and gap and right, it's acting together. So it's a confluence support. So retracement go further, should be fine as long as it finds and does not breach the 19,000 next week. That's what we look out for. Now, after the 19,000 is breached, then you have the 18,600 for the 50 exponential moving averages. Then in between you have supports at 18,900 levels, 18,800 levels, 18,700 levels, and 18,600 levels. Right, that's how it is. Right, that's support resistance on the Nifty. Banknifty, you can see that in first resistance will be 45,655. That's all-time high. And then rounding numbers from henceforth upside. Support right now, it's a very good support at 44,900 zones, and if that is breaching a 20 exponential moving average support at 44,400, interim supports are there above that at 44,500 and 44,850 zones. 20 moving average is breached, then you have supports at 44,151, 43,767, which is also near to the 50 exponential moving average support. So that's the support resistance on the Banknifty for the next week. I'm looking at the momentum and the trend of the indices. You can see that left side is it's the weekly charts, and the right side is it's the short-term charts of daily. So you can see the momentum is intact, right? Absolutely intact, but it has fallen down definitely. So weekly momentum is up and rising on both indices, Nifty and Banknifty, and momentum has dipped, but still in the bullish zones. Also, there is. You can see that it was a range shift last week, range shift and bounce. It had happened on weekly charts on both indices, and now it's a positive bullish momentum divergence that you're seeing on both indices, which actually it's seen more prominent on the Banknifty and not from the Nifty. So the divergence could add up, and then it could be adding up along the CIP bounce. It's a bullish view from the momentum, even though it has dipped last week. So trend is also rising up and bullish on both indices on both time frames. So absolutely momentum and the trend intact as of now. Now we'll have to look next week what's going to happen. It has dipped, definitely momentum and trend has dipped. Strength is slightly weakened, but it's absolutely bullish as on the short term, and along with the divergence, it makes it even more bullish. So that's a highlight. Even with the bearish week, and the daily candles that you're seeing there, momentum is intact. Trend is also intact. Looking at the India VIX volatility and open interest now, volatility VIX has spiked 7%. So you have seen that it has gone to the 11 below levels, 10.5 or something, and then bounce up every time. That's a loss. It goes historically that was a loss level, and it spiked up, and this spike up was somewhere to 12% or something. So previous spikes that has happened a few months back had gone to 20-25%. So more upside can be there. The main operating nature of the India VIX. So 1.53 is India VIX is set and still at the low volatility range. Absolutely no problem there. But it has spiked up is something of a warning. You've got to be cautious. It can spike up further more, right, given the fact that it has gone to the lowest of the levels, right. Open interest, if you see, it's a long unwinding, which is unwinding of the long positions and people going short on the top. That's what you're seeing on both indices as of Friday, which is bearish in nature. Open interest is not bullish enough. It's indicative from the put call ratio is 0.69 and 0.7, so it's not bearish, not bullish either. It's not bullish enough. It has to be up to 1 for bullish. So that's what open interest for the July 13, 2023 weekly expiry is what. So open interest is not not in favor of the bulls. The levels for this, that's where the highest support is seen as 19,400. That's where the triangle, the straddles are written 19,400. Straddles are written with the highest put and call writing for the scene at 19,400. Very crucial, very tight range. The next level of support is seen as 19,300 and then 19,500. Very tight range. So anything would happen. 45,000 is the highest. That's also a triangle there. Straddle there, 45,000 highest put rating and highest call rating at the same place. Second highest is 43, 47. It's a little wider range in the magnitude. So overall, tight range. This is the levels, making all of these levels, and then the support zones. Right? So you can see that the resistance started dominating, and like the previous week, the supports are dominating. The red was dominating, the green is dominating. So uptrend is not in favor of the bulls, definitely, but very tight, narrow range for both indices. For the next week's expiry, that's on July 13, 2023. Now let's look at what happened last week for the across the sector. It was heavily bullish previous week across the sector. This week, what has happened? The IT and the metal were not yet bullish on both time frames. That continues to be that. Both closed flattish. IT sector and metal both flattish, and both have the medium momentum, which has to catch up to make it to be bullish enough. So they remain sideways in the medium term. So we'll have to wait for long positions there. But the sectors were auto, which were bullish previous weeks, which was driving the market, was auto, pharma, FMCG, realty. All of them are bullish this week. Also, 2.2% of realty upside, FMCG 1.4%, 2.3% auto sector, and pharma closed flat within the seaboard. Otherwise, it will all move up, although there is a pullback. So across the sector move, there are sectors which are leading. That's what's required. Auto, pharma, FMCG, realty is leading and driving the market, which is a good thing. So that's what sector charts are also showing that, right? However, it's still not bullish enough on the IT and on the metal down. Those two charts, weekly charts that you see, you can see the momentum is rising up definitely on the medium term, but it's not yet there to be bullish for confident entries. And auto, FMCG, you can see that clearly it's a breakout that happened. It continues that. Momentum is intact. Trend is also intact. And the pharma is also broken out from a W pattern. Just started that. We have red week, but momentum is intact. The LT also has broken out the trend line and also the rounding pattern. And breakout is in progress. Momentum is intact. Absolutely no problem. So across the sector move remains to be bullish as respect to the momentum on the medium term. Absolutely nothing has happened. It's intact. Although there is a dip that has happened, and IT and the metals is yet to catch up in the bullish one. So now look at the industry heavyweights, the heavyweight stocks that contribute the maximum to the index. HFT Banks was very volatile. It almost made a new all-time high at 1757, and then pulled back, and then became the big pullback. A lot of factions happening because of the merger-related things. A lot of price actions as well. I tweeted earlier also that HFC is going to, if it breaks out really confidently with a weekly bullish candle about this bear zones, then it's going to be a blast of 500-600 points at least. Could happen on the point, but until that happens, until the most happens and things settle down, there's going to be this volatility. You can see that the momentum also is resisting the weekly and dips. Well, HDFC is no longer there after this month, and then you have this resistance or pullback that has happened on that also. That's eventually getting merged with HDFC Bank, and the whole index structure is going to be different by the end of this month. Let's industries again, green candle, bullish momentum is there. So the trends was the big move over the last week also, and this week also they continue that, although slight pullbacks, and momentum is in bullish on the medium term. So that's good. So Reliance is driving HDFC, and HDFC twins, both of them are having some trouble at the base zones. So Reliance, apart from Reliance, the IT adapt resistance, or little sideways. And HDFC was making the big new all-time high and breakout, but inverted hammer is seen, but remains in bullish momentum. Kodak was sideways as usual. So ICICI and Reliance is driving the market, you can say, among the industry heavyweights if you take the top 5. Right. Institutional participation. This is very, very, very interesting. Despite the pullback that has happened last week, 9,165 crores of buying has happened from the FIs. FIs had been buying since 4 months now. This is the 4th month over there buying. Right? That's amazing. So the whole pullback or profit booking is happening from the domestic institution side. 6,880 crores of selling what happened in the cash market. So net derivatives also fairly down. So the institutional support is there in the market, that's holding the market. As soon as it goes away, we have trouble. So as of now, that is good that FIs are buying in TS profit booking. So that's institutional participation there. Look at the global markets. We'll analyze the global commodities, the currencies and all that. Let's start with the currencies. The dollar index is 0.65% down. That's a big fall. 102.26. So it had attempted to move up, almost 4% with the previous swing low, and then once again it's going back to retest, the swing lows. So that's what happens. So basically it's a cup and handle breakout, which is not happening. Breakout is failing each time, and it's holding the levels. So dollar has cooled off, and USD and our currency pair has moved up, spiked. Rupee has become even more weaker. It was on the brim edge of breaking down the ascending wedge. Didn't happen. It spiked up last week. That's 0.68. It was a big spike up to 2.5, and once again it's remains to be weak, which is a concern. Crude oil 4.5% up, but still 73.65 level. Sideways momentum is a relief. Gold has still staying there, not cracking down. Neither it is able to break out. 0.15 flattish down more is what is seeing. It's at a resistance zone. We see that. This is crude that we were talking about earlier. This is the gold that we're talking about. It's on the top. It's a cup and handle. Medium term momentum has slipped in the sideways, but not ready to slip further down. It's staying there. Right? That means people are still thinking of investing in the gold. Right. So that's the thing. So, and oil, yeah, it's a relief, as I said. So that's what we're seeing. And global markets, we analyze the mother market. That's US indices, Dow Jones, Nasdaq, and downside you have the S&P 500. So the thing is, you can clearly see that the momentum is resisting exactly at 60 several times, or 4 times. So clear resistance of the momentum and the price can be seen. So the US markets, mother market, close red, despite the fact that it was a breakout attempt that happened last week. This is ahead of the Fed policy hike related things, news flow that's coming around the next weeks. So Nasdaq, although the momentum breakout has happened, it was moving up. Still, it seems to having resistance the last several weeks now. Same with S&P 500 also. So all of them, they also moved 1% down. Dow Jones anyway was having more resistance as compared to others, and more 2% down. So that's what the US market's closer at, right? It is basically attempting to break out, but the race resistance is out there because of the multiple macroeconomic levels of news flow that's floating around. So that's what the global markets. So in short, rupee is weakening, US market is facing resistance, and gold is not ready to move down. Crude oil is okay. So that's what news we threw out to Indian markets, we threw out to global markets, but it's be concerned for the Indian stock market traders. So 2 actionables for next week. Actionable time. So it's Glen Pharma, which is having a head and shoulder inverted head and shoulder breakout, which is not confirmed. Momentum is bullish, trend is bullish on both time frames, medium and short, but it is not confirmed. So if this resistance zone that you see here in the pink, if that's broken out and you have a solid weekly candle there, then that means you're going to have a very big aspect of height of this. There are going to be big moves if that happens. So wait for that, be patient enough. You may have tight stop loss, get stopped out, re-enter, get stop loss, but if the breakout eventually, if it happens, it will be big. Medium volume also is good enough. Inverted rank 10 for Then more pharma sector assets is also doing good. Here we have the Punjab National Bank. This weekly chart we're seeing it's attempted a breakout, failed, and then once again seems to be moving up, and then it can move further up towards all-time highs. Because momentum is climbed back with bullish ones, trend is also rising up with good strength as per the ADX indicator and the RSI indicator for the trend and the momentum. So this can be a positional bet as well. So actually, all of the public sector banks like the Bank of Baroda, Punjab National Bank, and Canara Bank, and all of them were spiking out and having bullish patterns. So it may be a positional as well as a long term bet, right? So Punjab National Bank and Glenmark form for the next week's potential long trades. You have one more actionable trade opportunity in the Nifty options weekly strategies that you are seeing here is a double diagonal counter spread where you are selling the near month put and near month call and taking hedge positions on the for week, not month, week. Probably profit is okay. You'll exit at 1 or 2% before the expiry day, and then that gives a wide range is the best range that can be available, and it's a low wicks, so wicks can spike up is what I hope, and that may turn more advantages if you use a double diagonal counter spread. So 19,000 and 19,600 if that concern is happening next week in this range, that's a good strategy. Double diagonal counter spread, Nifty weekly option strategy. No, that's an actionable. Let's just wrap up having talked a lot. What basically happened last week was a all-time high new level that was hit previous week, and further up move happened last week also, but it paused and retraced. So we had a big breakout, a rally that is actually from 16 to 18% both the dice. If you see, it's a cup and handle rounding flat pattern, all that we could move further up. But we have made a new swing. If we have made a new swing high, there is a possibility that it can reverse further and then make a new swing low and then further move up. It could be that, or it can continue a little more before that comes in. So we are cautious. So that's what a pause and retreat is what happened in an ongoing big rally, breakout rally. No, so that's what it is. So the moment is bullish, trend is bullish. The divergence also fast. Buying mode is absolutely bullish. Low volatility weeks is what you're seeing. US market has to break out. Actually, except in Dow Jones, other two are already broken out, and then asset resistance is another thing, but otherwise, US market is trying to break out. So Bollinger Bands are in expansion mode, moving average there, window gaps. So the two gap supports are there for Nifty. Right? CAP change in priority bounce level is there. It's possible. All these are giving hopes to the bulls, and then it's bullish, absolutely. Now the oil is not bullish enough. There is a drop in the momentum, of course, when the pullback happened, and it is the bearish candlesticks that you're seeing all around the last few days. So you have to be cautious. Probably it could be a reversal from the top after having made a swing high. So mild bullish view is there for the next week. There could be interim pullbacks, more pullbacks, and then a bounce can happen. That's what I think. It may go wrong, but manage your risk is all in your hands. I'm just trying to guess based on the technical chart patterns that I see. You may see another way, another person may see in another way. The market may surprise all of us, right? So that's how it. So play safe. Global cues are still having inflation, interest rate, policy decisions, Fed, for all these things, uncertainties are there. They are at very low VIX level. Spike ups could be disastrous. So VIX can spike up just like that and they shoot up. So here at the top, anytime reversals, pullback, retracements can come in even more with more severity. So you have to be cautious of that fact. Crude is fine, rupee is weak, and so uncertainty is still there. The US market also facing resistance and seeing that. 8900, 19500, and 43500 and 45500 is the levels for the indices, Nifty and Bank. Respectively on the upside, downside 19,000 and 45,000. As long as that is kept intact, it should be fine. We'll be continuing. Otherwise, we don't know where we are going to stop the retracement. So be cautious about that. So once again, keep your hedges. Use vertical spreads and all actions. It's completely hedge positions where you know how much you lose and you still in the game. You cut short your percentage if the VIX is spiking near to the 20. Right? That's all we can do. Cut short your position size when it is highly volatile. Right. So granular volatility at the lower level is what is happening nowadays. So intraday volatility is what is basically happening. Right. But positional plays, volatility may not impact that much. Intraday volatility spikes are creating a lot of problems for the option sellers. So cautious about that. Protect your capital, cut short your position size when it is spiking, and then stay safe, play safe. And protect your capital. You can use this option strategies for investment also by having covered calls and all that. Different strategies playlist has got the items. Check out that. That's all. My view is mild bullish for the next week, even though we have a very bearish and great stone doji that is there in the Banknifty. If that works out, it's not confirmed. If that works out, then we may have trouble. Otherwise, we'll continue the habit some more. So that's what. If you're not subscribed, please subscribe, and like and comment. Put in share it with friends. We have very few subscriptions. Appreciate I have this one. If you want to avail Telegram services, you can avail that by checking the description link. And we have all the social media channels where I'll be very active during the weekend. Videos on the YouTube are appearing only in the weekends mostly. So you don't want to miss out the technical chart analysis that I post on Twitter and all that. Please subscribe to all those links that's seen below. Thanks for watching, and happy trading next week. Happy learning, happy investing. All right, bye bye.